Welcome once again, folks, to Spotee on Shares, where normally each Monday through to Wednesday we get our guest chief spotter and myself, 𝐿𝐿𝐴 D'Amato, talk about the market day and answer your questions. But of course, this is a shortened week. As always, though, we do encourage you to go to our website, spotee.com.au, to see which guests are due to appear on the show next in order to ask them a question relative to their area of expertise. And then when you do have that question, text us 0480 079 089, or you can email us question@spotee.com.au. Let's bring in today's chief spotter who's been waiting patiently. It's Kunal Sawhney from Kalkine. How you doing, Kunal?
I'm good, 𝐿𝐿𝐴. How are you?
Yeah, very well, thank you. Why don't you take a moment to just tell everyone a little bit about your investing background and, of course, the wonderful business that you've built there at Kalkine, which is not just covering Australian stocks, but it covers global stocks as well.
Absolutely, 𝐿𝐿𝐴. Thank you, first of all, for this wonderful opportunity to come and speak over here. And with regards to our business, we are an international equities research firm with offices in Australia, New Zealand, UK, Canada, and US. And we cover all the major international equities and also the small ones and the big ones and the micro caps and the technology stocks. So we cover everything. And we have been doing this for 8 years. And we have currently about 35,000 subscribers who are using our product. So the good thing is that if you have questions about the big ones, about the small ones, we can answer those for you.
Excellent. So kalkine.com.au is the website where you can go there, and I think there's a trial available as well as a Kalkine Lite available as well. So people can go there and try it out before they commit to the big service if they wish. But yeah, plenty of information there. Encourage you to go have a look at the site. Currently, as we go to air, Kunal, the market's having another positive day. Started flat, but it's just melting up. The XJO currently up 0.33%. The All Ords up 0.26%. So it looks like it's the big guys doing the heavy lifting today. But let's get into the main market news. A bit of a quiet day, but one bit of interesting news was 𝐕𝐝TA Medical, which upgraded its revenue forecast for the coming quarter as business of healing burns patients returns to normal, unfortunately, or fortunately, depending on whether you need the treatment or you're invested. They've upgraded their revenue guidance by over $1 million or 10%, and this comes on the back of their recent announcement where the FDA has approved the expanded use of the RECELL system. So, Kunal, are you a fan of 𝐕𝐝TA? Because obviously there's these guys, there's Aroa, there's Polynovo, so there's a few players in this space, but 𝐕𝐝TA looks like it's picking itself up off the canvas.
Sure. So 𝐕𝐝TA Medical, code 𝐴VH, ASX code is 𝐴VH. They are a regenerative medicine company. 𝐕𝐝TA Medical, they have skyrocketed on upgrading their fourth quarter. So this is the big one, fourth quarter revenue estimate. The return of people to normal activities in post-COVID. So post-COVID era has sparked an increase in burn incidents requiring treatment with 𝐕𝐝TA's RECELL. It's I think it's one of their technologies that they use, or biotechnologies that they use, a RECELL system, paving the way for higher commercial revenue. So RECELL is the system. And besides that, the US FDA's recent approval for the company's RECELL system in treating full thickness burns of all sizes in children seems to have strengthened 𝐕𝐝TA's growth prospects for the months ahead. And also, according to the latest release, quarter to date, 𝐕𝐝TA has realized total revenue in excess of its fourth quarter guidance in range of $8.2 million to $8.6 million US, and RECELL commercial revenue and BARDA related revenue is rising, and management is raising the guidance to be in the range of 9.5 to 9.7 million. So a lot of positive news there, 𝐿𝐿𝐴.
Yeah, no, plenty of positive news. And I just got some positive news from Anthony on the fly, one of our regular Spotee contributors, who sent us a nice little thank you note. I didn't know. It's our episode 150 today, Kunal. Anthony's been keeping count. Anthony, go find another hobby, mate. Seriously.
So, 𝐿𝐿𝐴, thank you for inviting me on the 150th episode. Wow, I'm the lucky one.
Yeah, you are the lucky one. I didn't know. But let's get back to market news, though. Gentrack, who builds software for utilities and airports, and is a stock we've talked about on this program before, has told us that business has been tough because of COVID, of course, and the rise of new competitors who they say are gaining momentum. but have
Yes.
little evidence of being able to deliver on scale. Now, they're optimistic. There's a 47 PowerPoint presentation, actually. If you don't believe me, you might as well listen to them. Currently, the stock, though, is down another 5%. It's been a tough period for them, especially with now Hansen taken out and a few other disappointments as well with others. There's a lot of people wondering about the utility space. But I want to go more to a stock of interest, Kunal, if I can, and that's 𝐊𝐴𝐵𝐿. And they announced underlying trading performance with the business providing outlook statement for the year coming ahead. Told us that total sales will likely come in between $211 and $213 million. Net profit between 16.7 and 17.5 million, with cash sitting between $6 and $8 million. But that said, the stock is down currently as we go to air. The stock down 8.2% on the back of this. It's going to be a recurring theme in this session today, Kunal, the whole retail space and what's occurring recently.
Sure.
But let's stick with 𝐊𝐴𝐵𝐿 first. Is it a stock you like?
Okay, 𝐊𝐴𝐵𝐿, grooming retailer. I have personally used them to buy a couple of things. 𝐊𝐴𝐵𝐿 shares, they have edged lower on releasing their trading update for FY21, financial year 21. Overall, 𝐊𝐴𝐵𝐿 seems to stand in a favorable stage to utilize the do-it-yourself trend with COVID-19 accelerating, adoption of personal care appliances. So a lot of people are using this. The 𝐊𝐵𝐿 products. In addition, consistent and strong contribution margins from online and in-store results. So they're doing well online, they're doing well in store. 𝐊𝐵𝐿 being 100% aligned in delivering best possible customer experience across all channels. So once again, Elio, we like this because of COVID-19. Has helped people to to sit at home and do the personal care themselves. But in saying that, I think they also have a very good online presence. So overall, it's a good solid business. But obviously, every business can have ups and downs. But we like the business the way it is aligned online and in store.
And yes, it is a little down today, and also a lot of online retailers down. But again, I said we'll talk about that a little later, Kunal. Copper and gold miner Sandfire has come out and reconfirmed what we already knew, and what I have to say was a strange statement this morning from my point of view. De Grusser and Monty are depleting, we know that. There will be enough copper for full production until 2022. So basically they're going to be able to benefit from strong copper prices. Maybe that was the purpose of the announcement. Anyway, they're still looking at their Botswana operations. They're still drilling holes at Dulgana and other surrounding tenements as well. We wish them luck, of course. Unfortunately, though, the stock is down a little bit today. Just having a look here, down 4.9%. Market may be hoping that there were some preliminary finds from some of those drillings. But an interesting stock, technology, which I know is a sector you do cover a lot. A rising competitor to Nearmap. The company is Aerometrics. AMX is their code. Now, they do 3D aerial imaging, and a lot of people have said that their technology is better than Nearmap. But then again, their share price wouldn't suggest that. They announced an update today saying that the recovery in the second half of the year has been strong relative to what was achieved in the first half, which was a stinker. Revenue will now likely be in line with the previous year. However, EBITDA is still likely to be well down on what it was last year. Kunal, the price has had a very tough time. What's your view on this business?
Okay. Professional aerial mapping business. So that's how it's similar to Nearmap. Aerometrics, they have dipped lower on releasing trading update for financial year 21. Overall, the company has continued to see increased interest and usage of its MetroMap subscription service across the SME market over the past few months. Furthermore, opportunities are gleaming for the company's 3D modeling product offering in growth markets of gaming, virtual worlds in virtual reality and augmented reality, and property development. So I think obviously it has taken a bit of a hit, but overall I think they have done very well in terms of over the last few months. Aerometrics price has done really well in terms of I think last month also they did really well on around 12th of May. They had a decent spike. So they have done well, and I think they have some good times to come. So the technology player, what they're offering is very good.
Well, hopefully then adds a bit of a floor to it in regards to its price, Kunal. It's time for us to actually start answering everyone's questions. Remember, folks, that we can't take into account your objectives, financial situations or needs in our responses. And yes, past performance is no indicator of future performance. Also, remember that Kunal and myself and all our guests hold interest in stocks. Sometimes we do remember to disclose that on air, but in the cut and thrust of stock discussion, sometimes we might forget. Feel free to contact myself, Kunal, and all our guests directly if you wish to seek any clarification as to whether we hold a position in a stock or not. Now, Kunal, I told you about the sell-off that's been occurring in the online retail space. One of the questions I'll open up with today comes from Ken. He sent it through this morning and wondered whether Kogan, code KGN, is worth a nibble here. Now, Kogan is a stock that Richard Hemming also shone the light on just recently, and I've read a little bit on social media that the tide may be turning, that a base may have actually been set in it. Of course, they still have lingering inventory issues that they're trying to resolve. That's unfortunately been a bit of a dead weight, if you can't tell by the share price. Kunal, are you a fan of Kogan? And if so, are these levels here representing an opportunity at this point?
Yeah, I'm going to say some of the challenges is, from what I've been reading, Kogan remains to be one of the most shorted companies on ASX. And that's a bit of a challenge for Kogan, currently. I think yesterday also it was one of the most shorted stocks. The e-commerce company shares, primarily they're coming under pressure because of inventory issues and a slowdown in sales. Now, first thing, e-commerce is a very good space to be in right now. So Kogan is already in there. Due to COVID-19, people are buying stuff online, and they are leveraging from rising opportunities in this segment. And again, there will be these issues that they have. They will be sorted eventually. The company's growing portfolio of retail and services business. Other bit is they're also in the services business is impressive. So it has continued to scale its operations given the rapid growth experienced over the past 12 months. And over the first half of financial year 21, Kogan effectively doubled in size following a significant increase in consumer demand. It also was confident of continuous customer experience improvements in FY22. So they're saying their website, their apps are going to improve dramatically. If I look at how Kogan is likely to perform in the next few months, the path does not look very promising. The long-term fundamentals are good. They remain very attractive, given that Kogan is one of the, you can say, monopolistic players in online shopping in ANZ retail markets. Besides that, the board has invested in key strategic initiatives and has a strong level of in-demand inventory heading into the first half of financial year 22. So they are in the right space, they're in the right sector, but short term they might have a few challenges, so one needs to be wary of that.
Yeah, it really needs to set a new higher high, Ken, in regards to the chart. I mean, we're talking at a level, I think at least this would not be 100% confidence, but definitely that nibble that you were referring to might be around that $11.20, $11.30 mark. Currently at $10.86, picked up off its low of around $8.70. So it's already made a bit of headway in regards to that, but it's fallen from its mighty high of odd $25 odd, and it takes a long time to get back up the mountain. As they say, a 50% decline means it's got to go 100% the other way to go up, and notwithstanding we all hunt for them, they don't happen every single day, Kunal, as we know. But I will go to another retail stock if I can. Will, one of our regular Spotties, he threw up an interesting question. Actually, not the type of stock I'd normally associate with him because he likes to look at his charts, Kunal. But the company he asked about was Globe, and the code is GLB. And the reason why I say it didn't necessarily resonate with me is because the gap's all over the place and it has very low liquidity. But he did notice, though, that it had a trading update the other day, said that sales are doing better than what they thought, selling skateboards and all the kids that what they like to wear these days, whatever it is. He referred to some skateboarding moves, Kunal, but I can't even pronounce them, so I'm not even going to talk to him. But yeah, he's just very interested in regards to this business, given the whole retail space and notwithstanding the recent decline in retailers, all the ABS data is telling us that we're still spending more. So do you have a view in Globe? It's not a heavily covered stock.
Sure. Okay. Globe, in the trading update released on 10th of June, the company said its second half sales is approaching to almost double what it witnessed a year ago. The robust performance has definitely uplifted investor sentiment. So people are really liking the company with the increase in sales. And on the same day, the stock had given a breakout of almost 1 month long consolidation. The breakout has been quite sharp as the stock has already moved up over 15% in 3 sessions. Now, to add onto an existing position, one can look at a retracement till somewhere around 535. Overall, I would say widening time frame and careful analysis of technical indicators is critical here. And one thing I will again say that their earnings, so from a fundamental perspective,
Yeah, seems like we've lost Kunal's audio. Hang on, Kunal, bear with us a moment, just to check and see whether, no, we've still lost his audio. Kunal, can you hear me? Nope, doesn't sound like he can. Okay, well, we'll see if we can get Kunal back on air shortly, but just in response to that, or just to finish off on his comment, I don't know if you heard there, Will, he's right in regards to the technical indicators at the moment, because this thing could gap down pretty quick. So you just want to make sure that you have your stop losses tight, just like Kunal said, because this thing can move very quickly and rapidly the other way. Kunal, have we got you back on air?
Can you hear me earlier?
Yes, we've got you back on air.
Oh,
Sorry about that.
wonderful,
What was your
wonderful.
your final comment in regards to it? Sorry about
I was just saying that there are earnings before interest and tax, EBIT returns. They were 4.8% in FY20, and now they're about 16.8%. So they have grown quite dramatically in the last year. So I think they're doing decently well.
Okay then, Kunal, our viewers have long memories. As you know, they're smarter than the average bear. Anushka actually asked a question about a stock you've recommended before in the past. I know you know it very well. It's Afterpay, of course, code APT. Actually, it feels like it's been a while since we talked about it, not just with you, with anyone really. That must mean it's a serious business now. Anyway, I digress. He said he heard you talk about it, and he's just wanting to know whether you still have the same positive sentiment on the business. So that's Afterpay.
Yes, I do. Okay, so they went in the last month, they have gone up from $85, about $85, $86 to about $104, $105. They have a good client base. They have been to a high of $150, $155 or something like that. So I am pretty positive about this company, and I think their expansion in the US is coming. They might list in the US equities market as well. So overall, as a technology player, they have the first mover advantage. They're investing in technology heavily. They have good relationships with the retailers. So I am pretty positive about this company. Yes, PayPal can come, Visa can come, MasterCard can come, all these guys can come, but I think these guys have built a good solid business.
Yeah, it's interesting because a company that's, everyone wants to find the next Afterpay, of course, because there's many of them coming on the line in the market at the moment. Question came from James for an interesting stock, which is not really buy now, pay later, but payment gateway. There's a couple things going on. The company's name is Chiralto. The code is CRO for those playing along at home. Yes, he's just wanting to know, as an emerging payments business, whether it has much hope. Obviously, it's in the very smaller end of town. There's a lot of things that's selling in regards to its positive upside. But Kunal, do you think there is much hope for little old CRO?
CRO, okay. In today's world, B2B payment services, digital trading software, and integrated solutions are vital and here to stay. Having said so, Ciralto Limited, they are a transaction services business. They fit right in. The company has recently acquired App Establishment Software Group. Now, this is a strategic move as it allows Ciralto to take the next step in its ambition to be a leading integrated payments provider. So if you were to ask me, Ciralto has good prospect. I think its performance in the pandemic phase has been quite promising. So consistency in the days to come is crucial. In the last financial year, the company has rounded out its capabilities in payments and financial services, enabling it to own a customer from initial quote to final payment. So we believe the business like Ciralto, they are implementing digital tools to streamline process, improve efficiency and payment practices, all while ensuring fast trading and quick payments should be keenly observed and researched. Now, the reason I'm saying keenly observed and researched is because there is a lot of competition here. There are international providers like Stripe and PayPal, and a lot of other ones are there, Shopify. So one just needs to look at the competition that 𝐷𝐷 is going to face. So we need to be very, very well aware of the competition that these people can face, and hence we need to be on top of the competition. It's a good business. It's a solid business. But what we need to see in this business is we need to see the consistent performance over the next few years or next couple of quarters.
Okay, thank you very much for the insight there. So in answer to your question, James, yes, there is hope, but it's just keep watching it closely. I think it's a good time for us to go into our education corner, Kunal, and we
Yes.
have talked a lot about IT today. I know you're a big fan, but I'm actually, you probably don't know, given you're up there in Sydney, but here in Melbourne, I do the ABC Finance Cross on every afternoon at around 4:30, for those who haven't tuned in. Always I talk about the best and worst sectors of the day, and I can tell you perennially, it's either the best or the worst. And we're talking about the IT sector. It's always going to be, it's very binary. It's either really, really good or really, really bad. Unfortunately, in recent times, there's been a little bit more really, really bad attached to it. But you're still a believer in IT. Why don't you explain to everyone why you have such strong faith in this sector as a whole?
Sure. Over the years, what we have seen is that technology businesses, whether internationally or locally, they can really outperform a traditional business, whether it is a Westfield or whether it is the banks. They can really come and outperform in terms of equities market. So if you look at Apple as a technology business, they have given tremendous returns. Amazon, Google, Facebook, and locally in Australia, I hope you remember, Elio, during the COVID crash, Afterpay went down to $8 or $10 at one stage, and now they're at $100. So what we like to see is that these technology businesses, they build a strong moat, they build a strong advantage, and they run with it for a longer period of time. And yes, it takes a bit of time to get them to profitability, but once they are profitable and once they have that distinct technology advantage, the technology businesses can do really, really well. So I think one needs to take a long-term view, as Elio just said, that these days technology businesses are not doing that well, but one needs to take a long-term view, and one will see that the long-term view in technology, really pays off. And that is one thing that one really needs to focus on. Local Australian technology businesses have done really well as well. So hence, I would always say that one should really focus on technology businesses, because in the long term, they give really good returns. Even Warren Buffett, the guy who says he doesn't understand technology businesses, recently invested in Snowflake, the technology business, and that did really well for him. So what we really need to see is long-term technology businesses.
Yes, in our portfolio, but of course not all are created equal, as we know with 𝐊𝐚𝐥 having their problems in the past. Kunal, it's time for us to help you, or help us see the light on two stocks that you currently like, that we're going to sit there and listen attentively to, and then we're going to toddle off and do our own research and see whether these stocks align with our own investment objectives and tolerance to risk. So what companies do you want to help us see the light on today?
Sure. So Elio, first of all, thank you for letting me help you with the couple of stocks, okay? But one of them that I really like is Temple & Webster. It's actually a combination of technology and retail. The online furniture and homeware retailer has seen robust growth in the past few years, especially during pandemic due to an increase in online shopping. The company's third quarter revenue went up by 112%, which is something taking a note of, considering it includes March 2021, when pandemic pandemic impacts were being felt. So unlike Kogan, they don't have that many delivery issues and inventory issues. Furthermore, the management is currently investing heavily in its sales growth. The stock has also delivered over 100% return in the last 1 year, which is fantastic. So once again, it's a mix of retail, mix of technology. People working from home see their surroundings and they like to improve their surroundings, whether it is buying a new table or buying new chairs or something for their office, home office. And that's where this company, Temple & Webster, is doing really well. And online, you can shop and you can get them delivered within a week or sometimes even less than that. I've used them personally, and really, really, really impressive business. And the next one is Domino's Pizza. DMP. The pizza chain operator has grown at a steady rate in the past decade, and the company now aims to double its network of stores compared to the end of financial year's first half. The scope of business would further widen after the company recently announced its entry into Taiwan via the acquisition of Domino's Taiwan for $79 million. Interestingly, with nearly $450 million in funding headroom, the management still has money to pursue its plans to make further acquisitions, and the stock has also given a return of nearly 90% in the past 1 year. So really, really good one from that perspective as well. So people sitting at home love ordering a pizza, and Domino's has the technology. So once again, the reason I like these two businesses is primarily because there is a lot of technology in these two businesses, which really gives them that distinct advantage.
Yes, and then whilst you're eating that pizza, you can even buy the couch online from Temple & Webster and sit on that and do it all at once. Well, that's all we've got time for today and this week. So on behalf of all of you, I want to thank Kunal Sawhney from Kalkine for your contribution today. Thank you very much.
Wonderful, guys. Thank you. Bye.
And that's kalkine.com.au if you want to learn more about the services that Kunal provides. Now, yes, it is our last episode for the week, so stay tuned to the website to learn who will be appearing on the show next week. Follow us on social media, of course, if you want to keep abreast of any updates. If you've got a question over the next few days, send it through early on the text machine 0480 079 089 or question@spotee.com.au. And as you know, I'm looking at the next roster now, folks. So if there's a broker you use or an analyst who you think can handle the heat in the kitchen, well, we'd love to have them on. Let them know first and then get them to call me, or then let me know and I'll call them. They've got my number anyway. Of course, don't forget to learn about our inaugural Spotee Ed event, Hunting for the Next 10 Bagger with Tony Locantro, who incidentally will be on the program next week talking stocks, but that session will be about how to find them. More on the website if you're interested. Until next week, I'm Elio D'Amato. You've been watching Spotee, and together we've been shining the spotlight on shares.
News all day.